So one of the very common indicators that's used by a lot of traders out there is the moving average. And to be specific, it's the simple moving average. Now, how do you use moving averages the right way? There are only two criteria that you need to take note of when it comes to using moving averages, which I'm going to share with you later on. Okay, but in order to insert your moving average onto your trading platform on your computer, all you need to do is just go to Insert, Indicators, then go to Trend, then go to Moving Average. And once you click on this, then you see a pop-up box and you need to fill in a couple of things. Number one is your period. Okay, in this case, we are using the 100 SMA, 100 Simple Moving Average. And here, you need to insert the shift. Okay, keep it as 0. Then you have your MA method. Then put it as simple. Apply to close. Then for the color, you can put any color. For me, I just use black. And I use a thicker line also. Okay, then press OK. Then you see your moving average on your chart. So what's the function of 100 SMA? Now, if you study all the successful traders, they always preach one thing. And what's this one thing that I'm talking about is that never ever trade against the trend. That's why I don't believe in picking bottoms and tops, because lower price can go lower, higher price can also go higher. So never go and buy just because the price is very low and you feel that, oh, it's just not going to go lower, that's why I'm going to buy. Then eventually you find out that the price go lower and lower. Same thing with sell. When they see the price going up and up and up, they're going to be like, the price has never been this high, I need to make a sell. And when you make a sell on an uptrend, you're trading against the trend. And same thing when you are making a buy on a downtrend bearish market, you're trading against the trend. It is like swimming against the current. Very likely you're going to lose when you trade against the trend. So a couple of criteria that you need to take note of when you are looking for a buy and when you're looking for a sell. Let's say today you're looking for a sell. You need to make sure that two criteria is fulfilled for you to say, okay, I'm trading along with the trend and not against the trend. Let's say today you're looking for a sell. The first criteria that you need to make sure is that the candlestick must be below the 100 moving average. Okay, so for example, in this area right here, all the candlesticks are below the 100 simple moving average. And the second criteria that you need to make sure is that the slope of the moving average is going downwards. Okay, it's going downwards. So in this case, if you look at the slope, it is going downwards. It looks bearish. Okay, so it's only when these two conditions are fulfilled, then can you safely say that, okay, I'm trading in a bearish market. So this means that over here, you can potentially make a sell trade. Then for buy, you flip it around. First criteria, you want a candlestick to be above the 100 moving average. In this case, you look at this green area right here. All of these candlesticks are above the 100 simple moving average. Now, of course, the second criteria, you want to make sure that the slope of the moving average is going upwards. This area right here, you can potentially make a buy. Then same thing for over here, you can make a sell depending on whether there's a signal or not. Of course, we don't rely on moving average to enter. Bear in mind, this is very important. Never ever use moving average alone for entry, because you're going to get killed if you just do that. You need a lot more indicators for you to determine exactly which price to enter and exactly which price to TP, which price to cut your losses. But to put in general form, this is how we see whether we are trading along with the trend or against the trend. So if I give you an example, okay, let's say for this area right here, you see a candlestick is above the 100 moving average and the slope is going bullish. Okay, so I can safely say that this area right here, I can potentially make a buy. Okay, then for this area right here, a lot of people ask, can I make a sell right here? I wouldn't make a sell at this area because the price just came out from a bullish trend. And if you can see the slope, it is slightly going bearish, but it's also going a little bit sideways. So I probably wouldn't go into this trade right here. And very likely during this portion over here, although in the H1 time frame, you look at this time frame, okay? It's in the H1 time frame. Although in the H1 time frame, it is below 100 SMA. But if you switch to H4 time frame, very likely the candlestick is still above the 100 moving average. So one very important rule is that you need to make sure that both criteria is fulfilled in the H1 and H4 time frame. Because I'm a day trader and swing trader, I only mostly look at these two time frames. If you are other types of traders, make sure you look at least more than one time frame. Because if you look at just one time frame, it's not going to be enough for you to evaluate properly on the big picture whether you're trading along with the trend or against the trend. So in this case right here, I would probably wait a little bit more until the trend goes bearish. Let me give you another example. And this is where your candlestick is right now below the 100 moving average, which is this black line right here. And the second criteria, you want to make sure that the slope is going bearish. In this case, this area right here is where you can potentially make a sell. Then a lot of people ask here, is it okay if I make a buy right here? I wouldn't make a buy because same thing again, the price just came up from a bearish trend and you can see that the slope is going slightly sideways. It's not even going bullish yet, so I probably wouldn't enter at this area right here. I would want to wait for a couple more days before the slope goes a little bit more bullish. And probably at this portion right here, although in the H1 time frame, it is above 100 moving average, but in the H4 time frame, very likely it is still below the 100 moving average. Okay, so I wouldn't make a buy at this area right here. I want to make sure that the trend confirms before I make a trade. So let me give you another example, okay? This one is a little bit more tricky because a lot of people ask here, is it okay if I buy or sell when both time frames the trend is going sideways? Okay, let's say both in H1 and H4, you see this right here. Okay, candlesticks are above 100 moving average, but the trend is going sideways. Is it okay if I enter? I would say yes. Okay, say yes, but enter at your own risk. Because when the trend is going sideways, it is of course a little bit more risky as compared to you making a buy on a more bullish market. So similarly right here, the trend is going slightly sideways. I would still make a buy anyway, provided that there is a signal to enter. Okay, so there's no right or wrong when it comes to trading in a ranging market because it depends on your risk appetite. Trading is not a black and white thing, whether this is the right thing to do, this is the wrong thing to do. It depends on a lot of things like your risk appetite. If you are a risk taker, then you take the trade when the probability is not as high. But if you're more conservative, then you wait for trades that are of better quality, or you don't trade at all on ranging markets. And the second function of 100 SMA is that it will act as a dynamic support resistance. So let me give you an example. Let's say if we look at pound dollar. So this is the H1 time frame. If you look at how the price interact with the 100 moving average, you realize that the price comes up here and then bounces off the 100 moving average. Okay, so what I'm saying here is that you can't use this to enter, right? Don't go and sell here. What I'm saying is that the probability of you making a winning sell over here is higher as compared to, let's say, if you have to sell here or here or here. Because you know that if the price comes here at this point, very, very likely because of the fact that it can serve as a dynamic support resistance, like a ceiling for the price, very likely it's going to bounce off. Okay, it's not guaranteed, but very likely. Okay, let me show you another example. Same thing for pound dollar. If you have to buy over here, there's a higher probability of the price going up as compared to here or here or here. Because why? You know that it will act as a dynamic support for the price, like a floor for the support to bounce off. So again, if I change to euro dollar, you see the same thing happening again. The price comes all the way down here and then it bounces off. Of course, this doesn't happen all the time, so please don't use this to enter because the price can still cross the 100 SMA. Alright, so we don't rely on this only to enter because you're gonna get killed if you just rely on moving average for entry.